Hi everyone, and thank you for tuning in. In this video, I'm going to answer the question if Palantir stock is a buy. I'm going to use my simplified 6-step framework for analysis, so let's get right into it. First step in my framework considers the customer value. And for Palantir, it offers clients, government and private, data processing that informs decision making. The their service is supremely expensive. It's top of the line, nearly $1 million per month, and that has limited customer growth, right? Because if you have to pay $1 million per month, there's relatively few companies that can afford to pay that price. And so it has only 304 customers as of the end of the second quarter. However, that was up from 169 customers from the same time last year. Revenue has grown from 595 million in 2018 to 1.5 billion in 2021. So their clients are seeing value from their services even though they're extremely expensive. They are getting a return from that investment, and so they keep going back to Palantir, and that's a good sign for investors. The next step in my framework considers unit economics, and despite the expensive pricing, the company is still unprofitable. It generated an operating loss of 625 million in 2018 and 411 million in 2021. The good news is that the losses are decreasing, right, from 600 million to 400 million, so it's moving in the right direction, but it's still generating hundreds of millions of losses on the bottom line, even though it's charging a hefty premium for its services. The next step in the framework considers the total addressable market, because as an investor, you want to know what's the size of the opportunity, how large can the business grow. And for Palantir, the total addressable market according to management is $119 billion. Next step in my framework considers the competition, and for against Palantir, they have several lower priced, less customized data processing services available. So if a business wanted to go for the lower price option, the bargain option, they have those choices, but those are less customizable, less valuable. They are they won't perform as high a quality as they won't provide as high a quality data for your decision making processes, right? So if you have more complex data and you need more insightful data processing, then Palantir is the way to go. But if you have simpler data management needs, data processing needs, then you can go with lower priced bargain options. Palantir is the best in class product for businesses that want to analyze complex data and they want to get it right, where getting it wrong is not an option. The next step in my framework, and arguably the most important step in my framework, is valuation. And for Palantir, I chose to use the price to sales ratio because the company is not profitable on the bottom line, so I can't use the price to earnings, and they're not generating positive free cash flow consistently enough for me to use the price to free cash flow. And so I chose to use the price to sales ratio. And according to this ratio, the stock is not cheap, trading at a price to sales of 9.7. You see here, even though looking back over the last year and a half, it's near the lowest it's been, relatively speaking, still a price to sales of 9.7 is not cheap. And the final step in my framework considers risks. And for Palantir, the main risk right now is that the world economies are approaching recession as the Federal Reserve is increasing interest rates, as the macroeconomic uncertainty is elevated. That's causing businesses to reduce discretionary spending wherever possible, and they're reluctant to sign these new long-term contracts, these large spending commitments like Palantir provides, $1 million a month. They're not going to do that at a time when their prospects over the next 3, 6, 9 months are uncertain. They don't know how far their business is going to contract, and so businesses are holding off in making these decisions for now. And another one of the risks I highlight here is companies internalizing data processing. As it becomes a critical component of their business, they're going to start to become more interested in bringing this technology in-house, bringing this capability in-house so that they don't have to go out and pay Palantir for its services. They have that capability within the organization. That's a growing risk as data processing becomes more vital to the business. All right, so now that I've considered each step in my framework, let's see what grade I gave Palantir in each step of my framework. Customer value, we looked at it, how the services they provide and the money they charge. I gave them a C plus here. It's hard to get a better grade when you're charging over roughly $1 million per month for your services. You would have to show clear value proposition for companies. I would have liked to see more customer growth, more customers signing up and increasing their commitment year over year with Palantir. There is some evidence of that, but not as much as I'd like to see, so I gave them a C plus here. Unit economics, I gave them a B minus here. They're generating massive losses on the bottom line, even though that trend is improving as revenue is growing. They're still unprofitable on the bottom line. And so I gave them a little bit of a bonus because they have such good, near 80% gross profit margin. But the bottom line, the operating profits, they're both negative, and so B minus in this metric. For the total addressable market, I also gave them a B minus. A market opportunity of 120 billion is not massive. It's not a very big market. Relatively speaking, we have some other markets that are much, much larger, and so they get a B minus here. And then competition, I gave them a B. There are many, many, many lower priced, well, I shouldn't say so many lower priced options available, but there are much lower priced options available. Palantir is extremely expensive. They are the best in class, so they have proven their value to a certain group of businesses, at least 300 customers. But there is competition, lower priced competition, and so they get a B here. Risks, I gave them a B minus here because of the near term higher heightened risk of a recession. Businesses do not like to go on big spending programs when their revenues are falling. In fact, it's the opposite. They look to cut costs wherever they can, and unfortunately, data processing and Palantir's services may be one area where a business decides to cut their expenses. And then finally, valuation, I gave them a C plus here because I had to look at price to sales, and they were at a price to sales of 9. No consistent profits on the bottom line, so I could use the price to earnings. And relatively speaking, yes, they were as low as it has been in the last year and a half, but that's a brief public market history to look at, which doesn't give me as much confidence in that. And also the fact that it's price to sales and not price to earnings, again, gives them another ding. So I gave them a C plus in this metric. All right, so now it's time to move on to answer the question if Palantir stock is a buy. But before I do that, I would like to emphasize that this assignment, whether they're a buy, a sell, or a hold, is dynamic. It's always moving. The business prospects are volatile, always changing. The stock price could fall by 20% before this video even gets published, and maybe 40% after earnings comes out, and something major changes with the company. So I implore you to subscribe and follow my updates, because I will be providing updates on Palantir as the company reports earnings, as the price fluctuates up or down, and I will update and inform you all if that changes my assignment, whether it's a buy, a sell, or a hold, due to evolving business conditions. So please subscribe. You're not going to want to miss out on that. But now let's answer that question. Is Palantir stock a buy? Palantir stock is not a buy. The losses on the bottom line combined with the premium prices for its services at a time when businesses are looking to cut costs, and the stock is not cheap according to absolute valuation metrics. So all of those sway me to say investors should hold off on this business for now. Don't buy it just yet. Wait for the price to either come down or the business prospects to improve before purchasing. All right, so that's all I've got for Palantir stock. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.